I'm here with Michael Del Castillo, senior editor in charge of all things crypto, blockchain, and more.
And more.
You are bigger than just your beat,
Increasingly,
Michael.
I'm describing myself as a decentralized systems reporter, which has much less flair to it. But I
like
think it
thought
feels
leader.
More...
I aspire to thought
all
leader.
All right.
But we're talking about the regulatory environment. And the hero or villain of the moment, depending on where you sit, Gary Gensler, the SEC chair.
Yes.
Tell us what's going on.
So, Chair Gary Gensler, longtime Democratic regulator, he worked with both the Obama and now the Biden administrations, was thought to be a crypto supporter. Or let's put it this way, crypto folks loved to write headlines that made it appear that Gary was a crypto supporter. Mm-hmm. And
because he was sort of a live and let live?
Something like that. Yeah, but there was also some stuff that he was saying about the role of regulators to be supportive of innovation. And it was said like in the same breath as he would mention something about crypto, and people would connect those dots. And when he came on board, there was some like cautious optimism that this was going to be really good for crypto. But that's not been the case. And we're starting to see a little bit more clearly exactly how that's not being the case as we're learning more about his other regulatory moves.
Right. He has a pretty bold, ambitious plan that spans ESG, kind of the infrastructure of the stock market itself, crypto being one part of the equation.
Yeah. I would break it down into at least three categories, though I think there's probably more. ESG, specifically as far as like demanding compliance of publicly traded companies,
right,
as far as their transparency goes. Market infrastructure, so the way that stock exchanges and the countless middlemen around stock exchanges are required to do business and report what they do, and then crypto. And if you look at crypto in isolation, you see what appears to be a policy of sort of live and let live, as you put it, where in the 1930s, the SEC put together a bunch of what we are increasingly starting to be forced to think of as sacrosanct regulations. It's been 90 years.
It's almost like the Constitution,
yeah,
isn't it? What would the founding fathers have said?
The 1933 SEC regulations are a lot like the Constitution for some people. Like, they have not changed. There's been very little sort of addendums and amendments, and what we got in the 30s, we still have today, and especially as relates to the definition of securities and commodities. This is, of course, incredibly important for the SEC because the way that those things are defined can impact whether or not they are the regulator of choice, or the CFTC is a regulator, or some self-regulatory organization.
What is the preference? Is the preference among most? We're talking about, it's just like the Bitcoin, Ethereum debate. Would most people in the crypto space prefer that it be classified as an equity or be classified as a commodity?
I would say almost everybody wants at least some crypto token to be classified as a commodity. There's a much lighter regulation when it comes to trading with commodities. You think of other commodities, you're thinking of coffee, you're thinking of
pork bellies.
Pork bellies, stuff that's kind of easy to wrap your head around, stuff that you can touch, stuff that you can feel, and the regulations are lighter there. Securities, where you are basically investing in somebody else with the expectation of reaping some sort of financial reward based on their work, is much more complicated. And the upside might actually be higher over the long haul. Like the securities industry is incredibly desirable space to be if you're trying to monetize it. But those extra regulations also make the barrier to entry a lot higher. So I think that most crypto folks would not want to see their asset classified as a security. But there's some caveats there. So-called Bitcoin maximalists, the people that think Bitcoin is the first and only cryptocurrency, and they don't even like to call it a cryptocurrency. Everything else is a crypto. And they are sort of like the overseers of the only real cryptocurrency, Bitcoin. And I think Bitcoiners would love for everything else to be classified as a security. Because if all of their competitors are classified as securities, and to reframe that, if
it's like Highlander, there can be only one. Bitcoin is your only commodity
the
option.
Bitcoin maxis sort of have that there can be only one mentality.
Well, let me ask about Gensler for a second, because he is not the only player in the room. Like, if we're talking about this division, there's also the Commodities and Futures Trading Commission. So are they all of the same mind on this, or is Gensler really leading the charge? People are looking to him to kind of set the standard.
They are definitely not all of the same mind, and it's really interesting. So I do think it's worth starting off just by saying that there is a sort of generally accepted practice that the SEC is the more important regulator.
Right.
Like, if the SEC, ends up going to fight for this and decides that something is a security, regardless of what the CFTC might argue, the chances are very good that what the CFTC says is what's going to go. But that's not to say that it's
some are more equal than others.
Yeah, right. Exactly. The CFTC is very active in this. They believe that many more cryptocurrencies are commodities than the SEC has ever indicated. As of right now, I think the only asset that has that sort of safer distinction is Bitcoin. An SEC regulator said on stage in an informal way that Ethereum was also a commodity, but there's now a lot of wiggle room on that claim.
Random rhetoric on stage.
Exactly.
Not for policy make. Well,